We are here on this amazing day. Okay everyone, this is Cam Jones, FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's pick up for business. Okay everyone, let's take a look at HP. Yes, we are doing HP the stock. Let's see what's going on. So I was looking at it earlier. The market has dropped drastically with HP. I was looking back in time to see what was going on. HP goes back years, but we can see it is a flat line down here. So it started off back in, oh wow, January of 1968. HP has started off, and we see it's been on this low level for a while, for years. So we are in the 80s, 90s, and it's then start picking up to about, we got the, hold on, we go moving too fast. So we got the first liftoff back in 96, second liftoff back in 97. So every year, like, if we got some type of progression. There was another liftoff in this area of 2000, and then from there it was 2001. And the market went back down and consolidated. It popped back up, broke areas of higher highs back in 05, and then created new levels of higher highs back in 06. And then the market dropped, got to push back up to the top. So that's where we're going to begin at. Okay, market came from the bottom here, reached new areas of higher highs at the time, came back down to retest previous areas in here. So the market went to this support. It created enough momentum to push up. I actually see a formation here. Don't ask me how I see it. I just kind of used to the market. I see a double bottom here. This is really not that important, but I can see it, and it actually took me to draw these lines. So this will be the first leg. The second leg is this push up to this red candle. Third leg is this green candle right here with that spike down to the bottom. It pushed up for the fourth leg, which will be that near that retest. That's where it happened at. And then after that, after this retest, the market pushed up to new areas of high highs to come back down and retest. It created enough momentum to break through our resistance, created new areas of higher highs, and this is back in what, 2008. From there, 2008 July, the summer of July 2008, the market dropped back down. Something went wrong in there. They lost a lot of money that summer. The fall came around, January came around, they was able to pick up the market again, big push up back into that area of resistance. So the market came back down, create some momentum. It maybe probably tried to come back down to lower lows of this support. It created enough momentum that it stopped partially because it retested something in this area here. The market pushed up, broke our resistance. So we can clearly see the market's trying to reach previous areas of higher highs here. So once the market reached previous areas of higher highs, you got to remember that if we was back in this time, we would sit here to see if the market is going to break through this level here. If so, it would have created new high highs like here, but it didn't. What happened was, wow, I just did another formation. I didn't even see it. There's a whole bunch of them in here. Double bottom, 1, 2, 3, 4. Creates a double bottom, retest. So the market was going to try to push up. It didn't, end up coming back to the support. And here goes another double bottom. So you start seeing all these double bottoms everywhere. We can see that the market may try to push up to new high highs. If it doesn't happen right away, it's going to happen eventually, because we see a double bottom here, a double bottom here, and there's another one here. So it's the first leg, second leg, came back to resistance, retest, came back to support. So you would have been here, you would have sold here, we would have bought here, we would have sold here, and we would have bought here. And that's that formation of the double bottom. So when we find double bottoms, we're looking for a retest. Retest to happen here with these two red candles into the green one. The retest happened. We caught this engulfing. The green engulfed the red candle. The bulls engulfed the bears. Show that the entries in play. Here go to support area here. It pushed up, retested something in here to push up further, and here go to retest. There's actually another double bottom. First leg, second leg, third leg, push up. Once we see the push up for that fourth leg, it formed the double bottom. The retest candle happened here, which is the red one, doji. From there, we got this engulfing where it took entry somewhere at the bottom here or at the top of this candle here, and also the market broke this area of resistance. So basically did the double bottom, came up, came back down, retested support. That's what it's trying to do. And then shot up and created new areas of high highs. So this is the highest the market has ever been. I think truthfully, yeah, this is 2014, and from there it dropped. So back in 2014, this is the highest the market's been at, and the market has been at what? Look like the highest about $120. From there, we would have seen to see if the market's going to push up higher. It didn't happen. We see that bearish engulfing pattern. The red candle engulfed the green bullish candle. So once the red engulfs the green, it shows that the market may come down. Once we would have got here, this is the retest this is a doji candle right here that shows that indecisive. So the indecisive doji candle meaning that the market don't know what it's going to do. But what could have happened was this. The market probably was trying to come here, push down, doji came up. Sometimes when you see doji, the market pushes up or goes sideways. It could have pushed up to retest the area of resistance, but it didn't. The market just went right back down. Broke areas of support. It broke this it broke this level of support. It broke another level of support later on. So from here, we would have took it down here, and you would have bought here, take it to our TP, would have sold here, take it to our TP, formation. Let's backtrack. There's a formation, so the market shows that it was trying to shoot back up, but it wasn't happening. So right here, double bottom, first leg, second leg, third leg, fourth leg. So the retest happened with 1, 2, 3, 4, 5, 6. All this is the retest. Market came back down, retest the previous area of support, create enough momentum to push up to new areas, the same previous areas of highs. And we know that once we see the double bottom, the retest happen. After the retest, the market's going to most likely, sometimes it shoots up. Most of the time it shoots up, which it did. Once it got here, we got this doji indecisive candle. We could have got out our trade and just waited around to see what's going to happen. From there, the market created enough momentum that it broke through the support, one support, another support, ran into a new area of support, created enough momentum, another push up to the top. So it's still trying to break this area highs. It's not happening though. There's a lot of touches in this area. So from there, the market came back down to the support to try to come back up to the resistance, then fully come back up. And I think this is the formation. Okay, I never really get to say this formation too much. I think I said it in a few videos before that. I always talk about double bottoms. I don't really run into double tops as much. Double tops is going to do the opposite of double bottoms. Double bottoms push up to new area high highs. Double tops push into new areas of lower lows or previous areas of lower lows. For example, formation of a double top. Market pushes up. That's the first leg. Market comes back down. Even though, you know what? Let me just change what I said. Because I see a double top, but let's say we can see a triple top because there's multiple touches here. So this is not a double top, this is a triple top. So we see first leg, second leg, third leg came right after. It came back to retest previous area of support, try to create enough momentum for a breakthrough, and it came back to retest that high again. Wasn't able to break. 1, 2, 3. 3 tests to the top. 3 touches to the top, wasn't able to break. Triple top, if you count the tops, how many times the top touch the top, you look at the bottom, is a double bottom, 1, 2, and then we were looking for the retest. The retest tried to happen here for the push up to go higher. Did not happen. Actually broke the support, went into new areas of support to come back to new areas of resistance to go back into that support. So the market is working its way down. Broke the area of support. Market broke the area of support of resistance, went to support, came back to resistance, retested. So it's just showing that the market's going to come back down. So the market came back down to new areas of lower lows. The market dropped back down to about what? $13. So back a few years back, it was at $120. Now it's back to $13. So what we do know is that with the market, what starts from the bottom goes up. What goes up must come down. So as we at the bottom of the lowest lows, the market's trying to return back to previous highs, to back to that 120 mark. It may do, it may not. We just have to see. But what I can say is that I see a formation here. I'm going to explain my formation. Double bottom, double bottom. After double bottom, we see a retest. Here we go. First leg, second leg, third leg, fourth leg. The retest happened at this red doji right here. That's a retest, slight little retest. Easy call. From there, the market pushed right up to previous areas of resistance. Now we have to see what's going to go in this area. Is the market going to break our resistance line, meaning the roof, or is it going to touch the resistance line and not break through our roof and head back to the support of our floor? But we don't know. But we can see we are in a slight uptrend. So we just worked on market structure. The overall trend is an uptrend. So I'm going to clear my screen. We're going to head back over to price action. So we did see that double bottom here. We can tell that we are in an uptrend. If anything changes down in time frame, we'll switch it up. So what we're going to do is we're going to grab this area here, or this area here. I prefer it here. Grab this wick. I'm going to slice it right through the top. Make sure I get this area, this highs, because this is where market's trying to return to. Market's trying to turn to this high here. So let's bring this right up to the side. So now let's set up our SR lines. What we're going to do next, we're going to look for price action, and we're going to look over to the left to see if price action is trying to break anything. And we know we went back into, oh, perfect. For some reason, I felt like I had to go all the way back. So price is trying to break this area here, which would be this peak. Market broke through, retested, came out, came back to retest. So it's definitely well respected. From there, if the market had to go up to the next level, it will be this inverted peak here. But I feel like it's something going on in here, so let's slide over back to the left to take a look. So price wouldn't be here. It will be at this inverted peak here, which is perfectly touched. Retest, broke through, retest, came up to high highs again and broke through. So we can see that it's looking very, very clean. So we can see that price breaks this level, is going to go up to the to my first blue line. If it doesn't, it breaks my blue line, it can go down. But how far would it go? Let's take a look. Look for price action. Let's head over. Let's grab this inverted area here, this inverted peak, and boom, we all set up. From there, we can look over. Let's tighten about add more SR lines on lower time frame. Let's see if we see anything else that we can add. Okay, so what I see here, we have a peak that I can grab right here. Well respected. There's also another peak here. Well respected. Wicks is touching, bodies are touching. Wicks came, you can see the breakout, came back to retest. You can see the double bottom, first leg, second leg, third leg, fourth leg. Red candle came back to retest previous areas of support here. Market pushed up higher highs, came back down to retest previous area, maybe another push up back to the top. If not, drop back down to lowest lows to come right back up. So this would be the area of maybe it could be in this area, kind of just bouncing up and down, buying and selling, buying and selling. If we had to add any more SR lines, I feel like there's something going on here, but I can't tell too much. So what I'm going to do is I'm going to slide down this time frame back over to the left, see if I can identify something. Bingo. So right in this area here. Oh, overpassed it, overshot it. So in this area here, market came down, market came up. Okay, so I wouldn't be able to grab it here. If I grabbed it here, I'll be probably grabbing wicks, which I can get it clean. I can grab this area here at this red bottom of candle. I know it's well respected because I look over here. I would grab this this inverted peak here. So once I grab that inverted peak, it definitely looks clean. So even with this body of this red candle, it goes right into it. You know, it could be overextended just a little bit. I can push it up all the way up to that wick. But for right now, it looks fine to me. Also, there also is one more, and I probably wouldn't have seen this if I wasn't in this area. There's a inverted peak here. Definitely looks a lot tighter. I could bring it down just a little bit more. Perfect. Let's head back over to price action. Let's take a look at our masterpiece. So there's a formation. We figured out the formation on an earlier time frame, but I want to play around and show you guys on here because it's the same thing over and over. So this will be the double bottom, market push down. This will be the first leg. This will be the second leg. This will be the third leg. This will be the fourth leg. The retest happened here, not once, but twice. And then we got that push up, and it looked like a formation. First leg, second leg, third leg, push up for the fourth leg. Bingo. Red candle becomes retest candle, and after that the market push ups again to new areas, higher highs. Now the market's trying to come down to retest this area here, which is doing. So the market pushed up to new areas, higher highs, to come back down. So we got to wake some type of pattern. We can see that price is respecting our uptrend. So once we see that engulfing pattern or some type of pattern that comes into play, we take it up to new areas of higher highs. So what we're going to do is let's look for a pattern in the market. So we already know where we found our first pattern here with the double bottom. Go back to higher highs, because we have to retest here. This is a retest area, higher highs. So whatever's going to form is going to form itself in this area. So we ain't going to pay attention to the double bottom. You're not going to pay attention to the retest area here. You're going to grab this high highs area, this wick. And you're going to bring it down. We really don't know how much this candle is going to go down, but right now I'm just going to grab the bottom of this wick of this the price action candle, because it can turn around, respect our trend line, and go up. If not, it can drop further down to respecting line, go up eventually. But we can see that we are in an overall uptrend. So whatever's going to form is going to form itself in there. Let's go down the time frame to see if we can see some type of identification of what's going on in the market. Okay, I do not see a pattern just yet, but we can see how, from the things I was saying, that when price came out of that retest area here, it did reach up to new areas of higher highs. It wasn't able to break. It came back down. It's trying to respect our trend line. And the only reason we got a little bit of leakage is because of the way I dragged it. I can always tighten it up later on, so I can always do something like this, because we do understand the overall concept. And you can see that we still have perfect touches. Broke through, retest, came back to retest our trend line, broke up, came back to retest our trend line. Looked like it tried to retest our trend line. Oh, it did retest our trend line again with this long doji candle. So we got what? We got the breakthrough, 1 touch, 2, 3, 4, 5, maybe 6. Came up, came back down. This could be 7 here, and the market shot all the way up to come back down. So if it's respecting our trend line, like we see, it can do something like this. So first leg, second leg, third leg, fourth leg, retest, because it's going to retest in this area here, and then it's going to shoot back up to new areas of higher highs, or previous areas of higher highs. If it breaks this, then it's going to lead to new areas of high highs somewhere up there. So then you have to remark up. So let's say if we did see entry where price action currently is, and we see the pattern, just for you guys to have an idea on how to set up your trades, what we're going to do is you grab your long position, you put it on price action, which is the candle that's moving. You can look for that line in the middle. Mine is blue, so my price action is here, and we're going to bring it to the next resistance area. You can head down the time frame, so truthfully, we wouldn't take this trade like it. I don't even know what's going on in here, but it's something that's going on in here. Let me show you guys something. So market reached areas of high highs, came back down, and this way the market may be trying to push up at. So this would be the first leg, and you do something like this, shoot up a little bit for that second leg, come back down, third leg, and then boom, come back and retest, and it's gone. Or if not, it'll consolidate sideways. The weekend is coming, so it can consolidate sideways before we get that full breakout to the upside, because price is respecting our line. This will be an amazing trade, everyone. This is 106 pips to the top, 58 pips to the bottom. If we find the confirmation in this area for the trade, if not, we'll just sit here and wait. Not on this time frame, but on an earlier time frame, whatever pattern is going to, whatever pattern is going to form is going to form itself in this area right here. So whatever's going to form, all you guys have to do is wait here. It's going to form itself, and it's going to push. It may push up to new areas of high highs. Market came down, may do something like this: first leg, second leg, third leg, respect, boom, gone. If this trade is for real, then we're looking at 106 pips to the top where price action is, 58 pips to the low if it goes back. Ideally, this is not the trade. It's going to give you guys an idea on how to set up your TPs and stop loss for entry. Within my orange rectangle, you guys will be waiting here for the pattern. If you don't know how to identify patterns, what you would do is go to Google. You guys would type in Forex pattern cheat sheets. That's Forex pattern cheat sheets, and you guys will go to images, and you will review all the patterns that you can find in Forex. Once you see the pattern that you remember, or back and forth trying to figure it out, once you see it, you know what to do, and then from there the trade is golden. 106 to the top, 58 to the bottom. If it is not this breakout, it happens. If it's the next one, it's the next one. But you'll be able to see the move regardless. Okay, everyone, that was HP stock. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching, and thank you for your attention.